Ladies and gentlemen, today we're diving deep into SoFi's latest market movements, key data points, and what's shaping the stock's trajectory. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi wrapped up the trading day with a solid gain of 1.9%, standing out positively in a market that faced mixed economic signals. One of the notable macroeconomic factors at play was the latest retail sales data, which reported a 0.2% increase compared to the projected 0.5%. While on the surface, this might seem like a negative development, the market interpreted it differently. A weaker-than-expected retail sales figure raises the possibility of interest rate cuts in the near future. Consequently, there was a slight increase in the probability of a rate reduction at the Federal Reserve's June 18th meeting. However, expectations for rate cuts at the March 19th and May 7th meetings remained relatively unchanged. The market is now gradually shifting towards a more optimistic outlook, expecting monetary policy easing slightly earlier than previous estimates. The overall market saw some hesitation as investors braced for a crucial event, the NVIDIA GTC 2025 keynote. Historically, NVIDIA's CEO, Jensen Huang, has made comments about emerging technologies, such as quantum computing, that have sent ripples through the market, leading to sharp corrections. While SoFi isn't directly tied to NVIDIA's movements, its stock remains susceptible to broader market sentiment and investor psychology. If tech-heavy indices react negatively, it could exert indirect pressure on SoFi's stock. A noteworthy update from SoFi today involves its subsidiary, Galileo Financial Technologies. The company announced a new collaboration in the co-branded debit rewards card space. This initiative is being introduced in partnership with Wyndham Rewards, opening up new opportunities for customer engagement. However, while this is a positive step for SoFi's ecosystem, it doesn't serve as a major catalyst for the stock. Instead, it reinforces SoFi's ongoing strategy to expand its financial technology footprint. Additionally, CEO Anthony Noto has recently shown increased engagement on social media. Historically, some investors have criticized him for focusing more on personal interests, such as sports, rather than promoting SoFi's progress. However, his recent posts suggest a shift towards a more proactive approach in communicating the company's vision. Short sellers took advantage of the stock's positive momentum today, covering approximately 533,000 shares. Currently, about 12.17% of SoFi's float is being shorted, equating to roughly 131 million shares. In the past, short sellers have typically increased their positions during uncertain economic data releases, but today's action suggests that even they recognize the market's underlying strength. Furthermore, institutional activity remains steady, with over 10 million shares available for shorting. At its peak, short interest increased by about 2.3 million shares before seeing a significant drop, indicating a shift in sentiment. Looking at the options market, SoFi saw trading volumes of 9.54 million in call options and 5.98 million in put options. Approximately 49% of today's options activity leaned bullish. The total options premium stood at $15.5 million, which is in line with the previous trading session's $15.4 million. A key observation is that many call options are targeting the $13.50 to $14 range, reinforcing the idea that SoFi could trade between $13 and $17 in the near term. While bearish bets aimed for a sub-$11 target, there isn't a clear catalyst that could drive such a sharp pullback unless Federal Reserve Chairman Jerome Powell delivers unexpectedly hawkish commentary during his upcoming address. Dark pool activity today was relatively moderate, with the largest single transaction amounting to 1.7 million shares. Institutional investors appear to be waiting for a significant market catalyst before making large-scale moves. Looking back to late 2024, SoFi experienced a surge in institutional activity with frequent multi-million-dollar transactions. However, this momentum has cooled down. If FOMO, fear of missing out, returns to the market, it could reignite buying pressure, potentially pushing SoFi toward the $20 mark. What's next for SoFi? One of the most significant upcoming developments that could impact SoFi is the potential for Federal Reserve rate cuts in the latter half of 2025. Lower interest rates could enhance SoFi's profitability, particularly in its lending business. Some market analysts project that a rate cut could align with a broader bullish trend in growth stocks, setting the stage for a strong rally. From a technical perspective, SoFi stock recently closed at 12.32 cents, trading between support levels S2 and S3. The recent low was 11.96, while the high reached $12.47. While the stock didn't breach either key support or resistance level, traders should monitor these levels closely over the coming sessions. Looking ahead, the next major target is the 100-day moving average at 14.45 cents, which could act as a key resistance level. A recurring question from investors has been whether the economy is heading into a recession. It's no secret that consumers have faced financial strain for some time now. However, one notable trend during past economic downturns is that consumers tend to adapt. While labor market data has shown signs of weakness, the rise of AI-driven efficiency and automation is changing the landscape. Companies, including SoFi, are leveraging technology to optimize operations, reducing dependency on traditional labor-intensive models. This structural shift could redefine how we assess economic resilience in the future. Final thoughts. SoFi remains a stock with strong potential, but it's currently trading in a consolidation phase. While short sellers have pulled back slightly, the stock still lacks a major catalyst to propel it to the next level. Key factors to watch include Federal Reserve policy decisions, macroeconomic trends, and institutional investor activity. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.